Hey, good morning, everybody. Good afternoon, wherever you might be. Great to be back here with you for Managing Options Portfolio. I should say I'm not necessarily back with you. It's good to be back on with you, sitting in for Brent Morris, who always does such a great job each and every week. As we look at general strength in the market, still continuing to a degree, still higher highs and higher lows in the market. What bullish to neutral trades are out there in terms of options that we can tap into? There are plenty that we can look at here. And I'll say this, definitely some names, I would say, well, most definitely, generally speaking, names that you would recognize. And so a lot of good, stronger trends out there currently with potential flag patterns setting up, which can be interesting for a number of different option type setups. So looking forward to diving into that with you. Again, my name, folks, is Mike Fairborn, sitting in for Brent Moores. Good morning to you, Paul Montgomery. Hello to you, John. We've got Dom. How's it going, Dom? As well as Hope, Austin, and Kevin. Folks, I'm joined in the chat by a really good friend of mine, Ben Watson, very knowledgeable, 25-year veteran of the markets, might be 30-year. I'm not sure at this point, probably closer to 30. Ben, as you know, is a great guy out on the road. Be sure to take a look at, or be sure to attend some of those live events if you are in, if Ben's in your neck of the woods. So does a great job there, folks. Any questions, comments you have, throw those in the chat so we can get the show on the road. Hello to you, Robert, Harry, Frank, and Hill. All right, on that, folks. Let's hit some disclosure items to get started here. Looking forward to our discussion very much. All right, options carry a high level of risk. They're not suitable for all investors. Let's see, multiple leg strategies will involve multiple transaction costs. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Rolling strategies can entail additional transaction costs. This material is intended for general information purposes only. Paper money software application is provided for educational purposes only. Let's see, investing involves risk, including the loss of principal, and past performance is no guarantee of future results. All right, well, that might look somewhat familiar. All I did was change the background to black. My eyes, folks, I just can't take that light background after using the dark background for a couple of years. But just easier on the eyes, but I get it. I used the white background for a long time, but just flipped it from using what Brent had been previously had, but I still have his colored bars. Everything else is the same. You might recognize that. And I'll tell you what else is the same are Brent's positions. And these are the positions. We can go ahead and take a look and see what we've got in here. We've got a large open position. Looks just like a long call option on CAT, which is really doing quite well. Just 100 share, or excuse me, well, equivalent. Yeah, one contract. Yeah. So you got a single contract there. You've got ABT, a long vertical. That's Abbott Labs and some others. I wanted to focus in on top. You can see some of the totals he's got in this account right now. I want to take a look at some of the more recent trades and just see what's going on and see what we can tap into in terms of the short verticals. These are mainly, in fact, I thought every one of these is a short put vertical. There might be some calls mixed in on some of these, like, for example, an iron condor, but I think every one of these is a short put. And that can be interesting when we're looking at conditions within the market that have both maybe characteristics of both strength, but also, hey, let's open the door to a little bit of neutral or sideways type trading activity. Zooming in on this right now, you can see where we're at. We've got the S&P just clearly long-term trend, higher highs and higher lows intact here. Coming off that all-time high right there at 69.20 and change. And there was our pullback and a rally. Now, one thing, and I don't look at this too often, I do in my markets and sectors class on Friday. We close out the week with this class, and we will talk about something that can often drive, well, there's been a tendency, I'll put it that way, there's been a tendency for stock prices to be driven higher towards the end of the year. Some of it referred to as the year-end rally. I've heard the Santa Claus rally, but the key theme is rally. Now, it doesn't have to happen, but it's happened enough that there's some terms around the year-end type rally. I'm just going to take you into the style and into chart mode and seasonality, and just kind of highlight here for you, just on a 5-year, 10-year, 15, 20, folks, whatever time frame we want to look at, well, at least up to 20 years. I've actually seen it up to 50. We see this down below, SPX. This is the average. On average, this is what the S&P 500 looks like. Now we're looking at the last 5 years, and when you average those, prices, folks, are a lot lower. But we're just looking at the general kind of outline or what tends to happen during the year. Notice this, one of the strongest, I think it is the strongest month of the year, historically, at least through 20 years on average, is November. Look at the move that you get in November, actually really, really sharp. Now, we might be a little bit late to that, but if this does if it does continue with the trend, maybe just big picture, looking at option type positions, they might be, maybe in many cases, we're looking at bullish to neutral. Now, there could be some exceptions out there short term, because a lot of times when the markets go neutral, well, some prices go, if the markets collectively are going neutral, that means some are going up, definitely some are going down as well. You'd have to say out of 500 stocks. One of those areas, again, this is just under style, seasonality, just for a general perspective on what kinds of option trades might work in line with the market right now. We do have others. This is the sector relative strength. I know Brent uses this. I do too. And you come over here, and one of them that has been actually quite weak is right here. Now, we do have Walmart in our basket, our inventory basket, and we might just want to look at this one. The other ones seem to be pretty much in line with the market, but staples, consumer staples, has been weak. Now, different from healthcare. Healthcare, and this is one of the sectors I talked about in the markets and sectors class. It had been going sideways relative to the market. So even though the S&P 500 had been going up, healthcare had been outperforming, and we did ultimately break above a range, and some of those healthcare stocks did actually begin to outperform. Now, we saw a sense of that. Brent has Abbott Labs in there. That seems to be doing okay. But the staples. So let's just go back into Brent's normal grid here, and I believe that is just, let's see, simple chart. I'm not mistaken. Yes, indeed. There it is. All right. I love when they're labeled exactly what they are, a simple chart. That's all we were after. But here's that Walmart trade right here. Now, I want you to look at Walmart. And on Walmart, this is what we've got in terms of the position on it right now. We've got, let's see. Oh, that's interesting. Oh, they're you know what? They're not linked the same. I got you. So the charts in this are off. Oh, that's a 7. Interesting. I wonder if Brent would. I don't want to mess up his. I'll just do it for now, and I'll flip it back after. So now we're in line. Okay, so there's Walmart. Now the Walmart trade. One way to look at it, I like to look at Walmart sometimes just on the trade tab, and the reason is, and I found this to be somewhat helpful. You guys, the separation line, the at the money kind of line that we're looking at right here, ATM, OTM, that's at the money, ITM, out of the money, in the money. Got to put it as an I though. And then you got the at the money here. You get the lines. In other words, I'm just saying there are lines that we can look at, and it's really just helpful. It's a quick read on, okay, here's our position, and where do we stand right now with 9 days left? It's just something I do. You guys might find it helpful. I just like to see how far away I am, and then we can also look at, some of the option Greeks that Brent does such a great job of going through. This is just the standard, delta, gamma, theta, vega. And where do we stand in relationship to the delta? And just because I brought up delta, I just wanted to mention just a quick underlying on delta. Remember this, that a $1 for every $1 increase on the underlying, just to kind of help define delta, it will move the option price up by the amount of the delta, roughly, this range over here. So it's like a 41 cents. It's also known as like a 41% expectation that prices would go below that level, and the lower you go, obviously here we are all the way down to well, 20. It's the expectation of a lower number, and these can be really helpful when combining them with the charts. Now you'll notice too with Walmart, one of the great things is when you get companies that are a little bit more established, they've been around the block obviously for a while, they might have a lot of volume. And by the way, when I say volume on the underlying, yeah, you always want to take a look at the volume on the the option itself. We're in the thousands on many of these in terms of open interest. This 100 alone today, that's interesting, today has a 2,700 contracts. Now, what might they be looking at there? Now, that's oftentimes, that could be a big round number. Sometimes stocks will bounce around that number. They might find support or resistance. Who knows? It doesn't happen every time, but it could. Bottom line is, we're short the higher strike and we're long the lower. And we have 4 contracts in here. And how are we doing? Well, in total, we'll just go over here and I'll just pull up this right now. You can see that Walmart right along the bottom is down only about 100 right now. But if we look at the chart of Walmart, and I'm going to add in, this is interesting too, because as we're running up to Walmart here, there might be signs or indications that it could be a little bit weak. I'll kind of pump this up. Oh, I like the way Brent's colored that volume. That's cool. Love that. On this recovery right here off the bottom, a lot of times you like to see the recovery maybe gaining a little bit more strength coming up. I don't know how you guys like to see that, but I like to see, kind of off the bounce. I mean, there's that 100 number right there. And by the way, gosh, I just kept going back. There's a lot of support along 100. And we just had today on the 100 contract for the same month, 2,700 contracts traded there already. We don't know for sure, what will happen with the share price, but let me just state this. Notice there's a resistance line just above here. Let's draw this in red to highlight that. Now, I know we've got, let me just go back to it. We'll keep those lines on for a second. We've got 9 days left. If we're watching this right now, this is a rather weak kind of a bounce. Now, a lot can happen in 9 market days. So one thing we're looking at here is the price is just kind of going steady, but we've had a tendency to bounce off that level kind of sharply. And even a bounce like this would take us all the way back down to 100. Now that would put us, further in the red, so to speak, on this trade, because we're selling the 104, right? We're selling the 104, just tapping into a few of the other technicals that we're seeing here. What else do we have? Well, let me clear it off. So now you can see some resistance at 104 and maybe some sharp moves off 104, like right there. And a lot of times it can get a little bit hairy just before earnings. Earnings is coming up. What happens, folks, ahead of earnings? All else equal, what's going to happen with the option values? If the price of the stock just stays flat, what could happen to the value of the option? Even despite theta, what happens with open interest? Open interest could creep up to a big news announcement. Let's put it on right now. Excuse me, implied volatility, not open interest. Open interest could move up too. I'm referring to implied volatility. So this is what I was referring to right here. Let's make the line big enough so we can actually see it. We'll change up some colors a little bit. How about just green? So there we go. Look at this. Yep. John says volume up, price up. And yes, IV goes up. Yep, you got it, Zach. So where are we at relative to this option, its expiration, and earnings over here? Just kind of parking everything in. You can see over here that implied volatility does tend to climb. You can see it here. You can actually see it over here, the far left-hand side with our 6-month chart. It climbed kind of high. We're already high again. It was this high previously, back to, I guess, the May timeframe. But we're kind of at an elevated level. And there is that tendency, just as this line shows us here, going all the way up to earnings. Now, that would be the Vega or I should say, well, with implied volatility, it could impact the option by the amount of the Vega. Let's put Vega back in here. Let's just see what our Vega is looking like on this. So Vega, ooh, look at that. Implied volatility is at 45, right? And there's implied volatility. But if that guy were to continue to creep up, for every 1% increase, it could influence the amount of the option by the amount of the Vega. Okay. So if that were to go up, now there is still theta, but I've seen there's this interesting tendency for the option itself to remain elevated, the prices, which means that if it were to go down at elevated prices, the delta could really influence this against us. And given the fact that we're also right there, I mean, even our long strike is like slightly in the money right now too. So it's been moving against us here. All right, so those are some considerations. By the way, so got 9 days, it's 21st, the 21st of November. Just looking now, comparing the option to the earnings date. Oh, see, we have to carry it through. That's why that implied volatility is so elevated. So we looked at a few things on the chart here. Resistance, maybe the possibility of getting sucked back down to 100. And then what are we left with? Because we have to carry it through earnings. If we're going to hold it, there could be some volatility there as well. The last earnings announcement, it dipped again. It did another dive. So not only did it dive, it dove again. All right, one more. God, there's a lot of things we're looking at here, but look at the moving averages too. Brent's got the 50 on here, and we have yet to really clear that 50 with any sort of significance. We've come right up to it. It's as if the 50 and maybe even the 20 just above it is going to smash this guy right at resistance. We don't know, but the volume is, as prices are going higher, is also dipping. So there are just a few things working against us here. There's not a lot we're giving up at $96 relative to potentially, what it could be with 4 contracts. So I'm going to go ahead and take this position off. Is just part of our example trade based on everything we just discussed. Now, I would say this, if we were above the resistance level and prices are really spiked up, we may be in a position to close this out profitably because we're above the 104, but we're not there yet. And it just so happens that's where our resistance is at on the strike that we have right there at the red position we had sold for. Okay, so probably looked really interesting at a 100 bounce, and it did go up, but we're pausing there. So let's go ahead and just close this guy out right now. I'll go back to the monitor tab and create closing order. We'll just cover this whole thing right now. So here you go. There's the debit buying it back. There's the 4 contracts. We're just taking a look at the confirmation dialog box, and we're sending it through right now. All right. We'll see if that gets triggered or not. We can clearly put it in a market order if we want as well, if it doesn't, but there you have it. Now, remember what got us started off on this trade too? We were just looking at it. It was our sector relative strength, and it's just been downtrending. Lower lows, lower highs. It looks like it's fascinating, but even on a sector grid, folks, that looks a lot like another possible bear flag right at resistance. So we'll see. This is one where we're just kind of trying to minimize potential risk out there. Okay. Now let's move on to some new positions that may have already been past earnings that we could look at as well. Not NVIDIA. NVIDIA is getting very close to an announcement right there. And by the way, yeah, interesting. A lot of volatility up towards the top on NVIDIA. All right. Well, kind of sticking to the Mag 7 group, let's go ahead and take a look at Apple over here. Now, I looked at Apple in our swing trade class from yesterday, and I want to state Apple has done a very, very good job of holding support and making higher highs and higher lows. Now, I don't think I'm using the chart I looked at earlier that Brent had. He was using the 30, and the 30 was doing an excellent job. Let me just see if I could find it. Gosh, I don't know which one he was using. It could have been this one. No. There's our fill. Okay. we got the fill there. All right, after looking at that for a little bit, so let's just do this. I'm going to go back to the simple chart, and I am going to, not sure which one he uses. No, not dailies, not that. One more. Let me just try this one real quick. Nope. Okay. Simple chart. Look at the 30 on the 30-day moving average that Brent had. Really, really interesting. We'll just change this to a 30. It follows it so well. And you can see right here, after, I've got to go to I'm going to take it to a 1 year as well, without screwing up Brent's stuff. So when he gets on, it's all changed. But just pulling out a little bit more data to show you that 1 year, folks, we were in a sideways channel here, but as soon as we took out that sideways channel and began to trend higher, from that point on, we really began to hold very well this 30-period moving average. I've left the 20 on there as well because it was an early crossover all the way down here. Those moving averages crossed over, but we're above both. Now, what else we could examine on this is we've had a series of minor flag patterns that have actually done really, really well in terms of unfolding, and prices really having outsized moves to the upside. In fact, this right here could be another potential flag pattern developing. There's a very mild pullback, even well above maybe some of the prior highs. There were some prior highs right there, but still clearly above those two, above both moving averages, trend really quite strong. And by the way, unlike Walmart, we are past our earnings announcement, and it looks like the market responded actually quite well to those earnings as well. So a lot of sort of interesting indications here. Now, if we were looking at this in terms of a short put vertical as well, that might be an option, because some of these flags, let me just point this out. After this fairly large run, what did we do? We went down, up, down, kind of in the same range. After this kind of pull of a potential flag, we went sideways, tested the prior highs, we dipped only to hit the moving average, and we rallied again. Well, this could be an extended kind of a move. And one of the things is that I mentioned in the swing trade class is right here, folks. We are right at resistance. Do we want to buy right? I used to ask myself this a lot, because early on in my trading, I would see the entry and I'd say, gosh, I got to buy. But a lot of times I was buying right at resistance, and it caught my attention. I just said, why not just wait for it to get just slightly above that level, clear resistance, maybe hold it as support, and then see if I could trade it to the upside, because I'm really ultimately not giving up a ton here. So a directional trade might not be in the cards right now, but what could be in the cards, particularly if we have this kind of consolidation. This is a period of time. I mean, this is like over a month. Over here, this is over a month. Very close to, maybe not quite, but there is some time that went by as it was still bullish. Can we, if somebody is waiting for a breakout trade, could they decide to put on maybe a short put vertical right below here, try to collect some of that time value if the expectation is the trend will stay up and, maybe we hold above that 30-period moving average. So let's look at that right now as a potential short put vertical, sticking with the bullish to neutral theme, particularly with the strength of the trend here. So I want to explore trading, the trade tab. We're going to go out at least, a lot of traders, to balance out risk and potential reward. They're going out maybe 20 to 50 days. And we talk about that in our options course, but maybe 20 to 50 days out in time. Okay. To balance that out. Some might go a little bit longer or even shorter sometimes, but that December seems to fit very nicely in that range if we were thinking about a consolidation. 37 days. So it does fit within that range, which is nice. And let's take a look at those monthlies. Now, there is a weekly that's a little bit longer out in time as well, but just turning our attention to, I'm in Walmart. Sorry, folks. What am I doing? I'm looking at, we have the same ones. The same numbers. You know what? This doesn't match either. Oh, we're back to our 7. That's right. Dang. I don't want to save this because of Brent. That's what's throwing me off. We're still good though, because we were just looking over here. It has the same months to expiration. So we are solid. It's right there, 37, but yeah, it's Apple. It's not Walmart. Let's take a look at our deltas just to see where the expectations might be as well. A lot of traders will choose, and we talk about this in our course as well, but 20 to 40 in terms of selling. That's a 0.2 to a 0.4 delta. So they don't want too high of expectations, just using the delta, that expectation by itself, what would we be looking at here? So we've got really the 265, 260, technically the 270 is also there if we were really quite bullish, and it would just depend. More bullish, it could be higher premiums, and that could be more premium that we could potentially gain. But there's also just more of a likelihood that it would go below those levels too. Now, what I want to do is compare these levels, 260, 265, even 270, holding within that delta range with support on the chart. Where might there be support so we can help to maybe even solidify some of these ranges, 60 to 65, etc., or even between those ranges. So there is our 65, and you'll notice there's the 265. There's the prior high there, and then there's the prior high there. Nice. We could potentially sell a put there or sell a put there. This would be for about that 0.2 delta, 0.22. I think that was about a 0.3 delta. So let me do this. Depending upon what you guys think in the chat, I'm just going to do this. Let me just create a quick poll. And then that way I'm not selecting it. I'm getting your guys' your feedback on it. Let's see, for Apple, which put option to sell? Just as a general idea. So I'll put 2 of these in here. We got the 265 and we've got the 260. Okay, so if you're able to vote, that would be great. To get a like a valid kind of a analysis, we're looking probably like a population mean. You need at least to be like at least 30 respondents. So if we can get 30 respondents, I'll go with that. Hopefully, I can't read how many we've got at the time, but I'll end the poll here in just a minute to give you guys just a chance to go through. It looks like 265 might win out, but 265, 270 right there. Okay, and so it has been really quite strong. And one thing I will say too is that even if we were to dip, notice if we had, just like characteristically off the top here, you dipped about this much, you dipped about this much. That might not happen, but if it did, it might put you very close to that 265 thereabouts as well. Okay, so you might be like right there, and there is a support level. It might also be bolstered by that 30 period moving average, which has just been outstanding. You have to say, thus far in the trend, it's been fantastic for hitting those longer term, the really intermediate term or short term pullbacks. But in this longer term trend, they've done really quite well. All right. Well, let's go ahead and end the poll, and let's see how many poll numbers we got. See if we hit a valid mean. All right. Risk on, says Kelly. And let's see what we got. Let's end the poll, see where we're at. All right, 36. Yes, we did it. All right, folks, by the way, if you're doing these example trades, feel free to do the 260 if you did it. But just for the class purposes, we'll go with the 2/3, basically, of the class went for the 265, a little bit higher than 2/3. So let's do that as our initial sell point. Now, Brent has been doing on many of his trades. That was just a $1 spread, right? Let's just see what we've got over here. Very close. That was a 2.5. There were probably only 1 to 2.5s in there. Maybe that was a 2.5 as well. We have the ability with this to do a 5 wide. Let's check the volume on these right now too. Here's our 5 wide. The volume is excellent. In fact, today alone, that is almost the highest that we're getting, at least in this number of strikes that we've got right now, 11,000. So we're in the tens of thousands range in terms of open interest. Very, very good liquidity there for sure. And today, 2,300. So if we were to do this, I realize it is a 5 wide. Folks, if you didn't like the 5 wides, there's the 30, there's the 44. And what I'll do is I will do a comparison of both. We don't need 15 contracts. We maybe need 10 to see both of these. And yes, indeed, we've got it. So I wanted to show you over here. See, we don't have it. We still have the 5 wide. Forget it. We'll go with our monthlies that have a lot more open interest, and you got it over here too. So it is going to be a 5 wide, and here you are at the month. But that is a great way to make some comparisons. Just open up the other ones. Sometimes I've done 3 before, just to see how it's looking. But there we go. So let's go ahead and sell this one. We'll go ahead and buy the 260 right here. And by the way, just as a fun comparison, look at this. If we did the 265 and just sold a put instead, if we're just selling the put, look at that margin requirement, about 4,500 and change over here. But where it really stands out, because we're taking a long position on it, and yet we still don't have a breakout, it may in fact be a risk on in many people's minds, as you know, the trend's up and other things too. But look at that max loss, you know, without the breakout. It's just, I'm just showing this as a comparison. So it's a big number, 26.43. If you just sell the long strike there, how much are we making? We're making quite a bit less in terms of the premium, but we can add to it to maybe get this even, you know, to a similar credit range as like the short put on the 265. Look over here with me. That buying power effect, folks, that's a lot less than, was it 45? Don't quote me if it wasn't, but I thought it was 45 and change. 4,500 for that, 4.5. The max loss, I mean, remember, we're defining it. We're looking right at the order confirmation dialog. We're defining that risk to 385, which is a heck of a lot less than the 26K. But the credit's a lot lower too. So that's also less than the 395, roughly $395, right? Per contract. Okay, so let's do this. What if we can still balance this out? So I'm going to go back to the edit. Let's go ahead and do 2. There's 4. Brent had a 4 contract on Walmart. Let's see what it looks like on Apple over here too, just to kind of balance these out and see where we're at. Oh, wow. So it's still a lot less, 1,500. 1,500 and change is a lot less than the 4.5, you know, in dollars. That's K. And then look at that same number here. So margin requirement, max loss, that is a lot less than the 26. If we were just looking to do options, right? Put a $sign in there. Okay, now comparing the return, now we're greater though. So by using that credit, folks, we are greater than the 395 or whatever it was when we looked at it, $395. We're actually making more, getting close to $100 more with less and less. So it's interesting. And sometimes you can really, you know, when you have more to play with in terms of strike prices, that's interesting too. You know, in between strike prices, 2.5 or even dollar wide. But that's it. So let's go ahead and take a look at this right now. I'm going to just unhook that for a second and see where we're at. There we go. Okay, so we're still at $1.19 credit. Maybe it jumped up just a little bit. Okay. Yes, there we go. Put that through. You guys are making some interesting comments there. We'll see if we get this fill on this, and I will try to do it again. Chances of getting that fill could be heightened because we're dealing with, well, 21 million shares today, and you guys saw what we were looking at in terms of the open interest numbers, thousands, tens of thousands over here. I'm just looking at open interest right now, and big mover today on that 265. I guess evidently we're not the only ones looking at 265. people have been trading that. If I don't get a fill here in just a second, I might just flip it to a market to get the fill, but a lot of times we will get it before we're done. Okay, another one. Let's do another one. Let's put another one in here, playing with the strength of the market. I should say trading in line with the recent strength of the market. Look at Amazon. So another company we've heard of before, and recent earnings too. So we're past earnings. We don't have that issue like we did with Walmart. And also, pretty interesting, it appeared at around 240. There was a prior high, resistance through here, resistance again, and then there's our fill, and then perhaps support now. The corollary to resistance up top is going to be, the way traders will look at it, is support down below. Past earnings. So we don't have some of those other issues to deal with there. Okay, so let's do it. Let's take a look at it right now and see what we've got. So sometimes traders might look at that 240. It's already bounced off it, and maybe there's some support there. I think we can slip a trade in here before we're done on this guy and see what's going. So here is our December. So still sticking to that 20 to 50 days out in time. Where are the deltas at? Before we get into that, you can still see, hey, in the thousands for open interest. Check. Put a check mark there. Could help to influence. Ooh, some of the valuation. That's a 5-cent right there. 5-cent spread on a 230 strike. Wow, 235 strike. That's a dime. And then we've got the volume up top here, which is also an interesting, sign of liquidity. I mean, we're dealing with companies that are, well, this is also a Mag 7. So seeing some recent strength in them, which is interesting to see in terms of the chart for the type of trade we're putting on. Let's move over into our deltas, and we can take a look and see how that does compare with support on the chart. In fact, real quick, support on the chart, that 240 is where we were at. Are you guys going to elect a 240 here or like a 235? There appears to be even, another layer of support right through here. The 240 is a 38. We're getting very close to the high end. The 235 is a 30 delta, 30% expectation of prices getting below there. So it's getting lower just based on that calculation. And a 23 down all the way to 230, which is all the way down here. Look at some of these values though. Yeah, you're still, in terms of premium, $660, $660, $490 as it stands right now with these bids, and $360. So let's do another quick one. I love to see where you guys are at on these. And I'm going to add in this case, those 3 strikes. So we're holding within almost the entire delta range that oftentimes, traders will look for here. Okay, so just throw this in real quick. We'll add one more. Good, good. All right, and let's see, 240 is our top. I got a couple other things to look at while we're waiting for the votes to come in too. 235 and 230. Boom. Okay, so we started the poll there. If you guys are able to, that would be awesome. Just looking at deltas relative to support. And of course, we're basing all of this on underlying characteristics of the chart too. So I want to make sure that we're clear on that. We looked at Apple, and what was the key with Apple? Well, we had the trend. There was a trend going on with Apple. It was to the upside. We have the trend going on with Amazon too, where both post-earnings rallies, so the markets responded favorably, we have to say, responded favorably to the markets. And I wanted to just state that with that, there's a good, maybe some interesting support levels there too that traders could, be interested in looking at too. All right. Okay, well, we're waiting on that. Just a quick note, I've put in here some of the performers in this list up top here, just in my X handle. Let me clear those off for just a second. that we saw energy was a strong performing sector last week. And we saw that. I'm actually keeping an eye on some of the earnings too that we're getting out this week. There are some interesting names. Cisco is one in this area. A lot of times when you get earnings, it could really influence prices higher. If you guys wanted to take a look at this or anything else, be interesting. A little side note. We had the Aurora Borealis in Utah. First time I ever saw it here in Utah. Fascinating. The colors here were really bright. And I don't know if you guys saw that in your neck of the woods, but anyways, if you want to check out some of those earnings, I do have those over here in my X handle as well. Boom, boom, there you go. Be sure and follow Ben Watson at Ben Watson CS as well. Okay, finishing out that poll right now. And there it is. Ooh, almost the same thing. So 2/3, very close to it, and 60% plus. Interesting, though. It's interesting, sort of a spread there on those numbers. We're looking at 235. So that was actually the one that was somewhat interesting, too, because it gave you some room around the 240, and you're getting a lot of, I mean, if you tie in, like, oftentimes like a band, it's not necessarily like a certain point of support, but there's a band right there. But, 240, 235, and 230, you got them. Let's hurry and put this one in because we're just about out of time here. And we'll set this guy up right now with our 235 to 230. Okay. Still using that December. We'll click once, we'll click again. I'm going to do a couple contracts in here just as an example. I'll put us up to about what? 260-ish, 264 right there on our potential credit. There's our margin requirement. Same holds true for our max loss, just reading through the confirmation dialog box there. Let's send this guy through right now. And should get a fill on that as well. But ooh, good liquidity there too. Just on the underlying as well. 14 million shares. All right. Folks, yeah, it was fascinating to see this. To see this happening over there, you're just like, what? They refer to this as the Aurora Borealis or the Northern Lights, but I hadn't seen it in Utah before. Kind of nuts to see it for the first. I thought it was something you'd find just like in the North Pole or whatever, Iceland or whatever the case is, but no, it could be in your backyard as well. All right, everybody. Hey, if you got a value out of today's presentation, consider smashing that like button. It lets me know that it was valuable to you. Folks, be sure to subscribe to our channel as well if you like this kind of content. Brent teaches a great class during the week. Encourage you to stick with this class. It was my pleasure to step in for Brent today. Hope you got something out of today's session, and it's just some interesting concepts. Hopefully help you out. All right, on that note, thank you so much, Ben Watson, and a great thanks to our production crew behind the scenes, folks. Great thanks to all of you. It was awesome being here with you. Folks, have a fantastic rest of the day. See you next time.